Okay, good morning, traders. I'll give you a little video for a snapshot, very early doors, new morning, um, and we'll look at see what trends we have in the market, where is the momentum today, potential opportunities for day trading later on. I prefer to wait for the data to come out. We've got PPI 8:30 New York, and then we'll have the usual Wall Street open at 9:30, and once the dust has settled, that's when I approach the market looking for a setup according to the rules and the methodology uh, for how I approach the market, and using this fantastic tool, um, part of the Predator Trading Tools series of indicators. This one here is the TrendPredator Pro. This is the better version. This is the first version of the indicator that we are currently testing, and I've opened up opportunities for anyone that wants to um, have a look into the indicator and see whether it could be useful for your own analysis. And there is information in the educational channel on how to access a free trial. And by all means, please give your feedback as we um, develop this indicator, many of which the setups, the trading setups, have already been programmed into the indicator. And so far, so good. There's been a couple of bugs which we've resolved, and we've had some good feedback so far from those of you that have been trialing it out, taking your suggestions and so on. But in any case, let's get into it very briefly, and then we'll have a look at the market. So I've put together this panel. Um, Now, you'd need to have a premium version package at TradingView to be able to have as many windows as I've got open in one screen. So I've got 8 here, which can be accessed through the drop down menu and however you want to lay out your charts. But what I've done is I configured the indicator into these little small windows. I can show you how to do that if anyone's interested in that. You'll have to have, like I said, the premium package at TradingView in order to have as many windows as 8. Um, I'm not sure what the lesser packages allow you to have. Um, I'd have to look into it. But in any case, um, I'll be more than happy to send you. I can send you a copy of this. I just copy the link, and then you'll have it exactly set up as I've got it. It's quite cumbersome to get it how it's showing, but essentially what it is, it's each instrument, and then it's got the little line chart just to give me an indication of what's going on the day. You've got the day separators there. So on the day itself today with gold, as you can see, um, we are inside of yesterday's range. It hasn't taken the low of yesterday or the high. Now, I don't need to look at the chart, but it's nice to have it there for context. But the actual table itself down here tells me what the price is doing in relation to the highs and lows of the month, the week, the day, the 8 hour, the 4 hour. So I can look at this and get a very, very quick snapshot of what's going on and whether or not there could be a trade opportunity brewing for my session. So it gives us the context. It's telling us it's a reversal continuation into the uptrend. So what does that mean? Well, what it means is there is a reversal taking place. Um, if we look at yesterday, it was a downtrend. So we're reversing. So I'm having to pause every 2 seconds. I've got the lurgy, so I'm sneezing a lot, but excuse me. So we've got a downtrend here from yesterday, Monday, the opening range of the week. Today, Tuesday being the initial balance. And often Tuesday can expand the range. So just keep note of that. When I say expand the range, it can either move the highs or the lows and expand the opening range rather than just um, trade sideways inside of the high and low. So I'm in anticipation of a break of either the low or the high at some point. However, the lows, which are closest to the price, um, may not be where this is going, because what we've actually got is an uptrend. We've got a price that's moving up into that downtrend in line with the higher time frame. And the higher time frame on the monthly and weekly chart shows us that we're bullish. So on the monthly chart, we had a fake out low, and on the weekly chart, we broke out of last week's highs. So let's look at that, and you'll get a better picture for what this means. This requires some learning in the way to read momentum and the trends in terms of higher time frames and confluence of those down into the lower time frame. So I'm always looking for a confluence of momentum and trend one way or the other across all the time frames. So if we can have the monthly, weekly, and daily all bullish as gold is looking at the moment, then that gives me confidence to want to buy the market within my trading window, which is 10 a.m. till 12 p.m. New York. And I'm looking for an explosive parabolic move, a stress free trade opportunity in line with the trend and momentum at timings whereby 10 a.m. is where the market could quite often give you a directional, firm move. Okay, so let's look at gold, XAU, USD, or just go to the watch list. Okay, so this is a 15-minute chart. This is exactly the same information as we were getting from this table. I've just gone into an individual chart looking at the price. I've got my indicators set up to allow me to see what last week's range was, this yellow box, the previous week to that week, that range, okay, and I can see that this week here was an up week. So was this week. This was an up week, okay. So the indicator is telling us that last week broke out, BO broke out of the previous week's high. So long as we're above that previous week's high, this will be showing BO for breakout. If we move back below that level, it will show fake out low, fake out high, sorry, as it did here, fake out high, okay, because we broke back below that level. All right, so we've gone from a bearish condition at the start of, when was this? This was yesterday. So yesterday it was bearish, but because today in Asia we pumped back above that level, it's bullish. And we pumped back inside of Monday's low, fake out low, bullish. Okay, so this is helping us derive a thesis based upon confluence in the market across the time frames. As you can see, this table is very bullish, and the context is reversal continuation into an uptrend. Okay, so we assume that we continue bullish, and that could give you a trading opportunity. So we're assuming bullish. We've got a bit of uptrend there, bit of a contradiction here, dropping, but we're back above. What are we above? We are above Monday's low, so that's bullish again. We're also above the previous week's high, bullish again. So I'm still bullish on gold for the moment. So I'm in anticipation of a move up. Okay. So I hope that gives you some insight as to how this indicator is helping me analyze the market. There are more details behind it, such as we had a first red day, which was yesterday. So following consecutive days of moving, yesterday was a red day. So that is somewhat conflicting because what this could be doing is giving us a correction only to come back lower in line with that first red day close. Because this could be a trend that is exhausted and we could be heading into stops that will likely be below the daily lows on that way up. Okay, so what am I looking for? I'm looking for a confluence. So ideally, what I'd like to see is I'd like to see the price now resisted at the highs of the day. And if we can get back below that previous week's high in my timing window and below Monday's low, so if we could have some sort of a pump here and then perhaps stalling at the closing price, monitoring the price action, and if we can get something that rolls over below Monday's low, then this entire table will be red. And in line with that first red day, we can be trading in anticipation of a break of the lows from yesterday. So I was talking about this being yesterday's low. That's Friday's low. Sorry. So in line with the break of Friday's low to break yesterday's low in anticipation of a continuation of that sell-off from yesterday. So that would be my ideal setup for today in gold. Because of the first red day, I'm looking for that continuation. So we've pumped up. I'm looking for this to be resistance. I'm looking to get back below Friday's low, below the previous week's high, and then in line with what could be the foreseeable futures highs and a continuation to the downside. At the moment, we don't have that because we're above last week's highs, Friday's lows. But if we get back below that area, which is highlighted on the chart, WBO, DFOL, those levels, daily fake out low, week breakout, if we get below that support, then I'm looking for the short. So quite often the closing price, so yesterday's closing price, can act like a magnet. There's still space to go to it. We rallied in the open in Asia. So there's space to come down into it, retest it, and see how the price behaves around it. And if it gives way, it will likely lead to a sell-off in line with the higher time frame trend because we are front side of the trend, bearish below, in line with the trend, sell-off. Okay, so I hope that gives some insight as to how this indicator works. We're waiting for a break of those levels. It will update in real time and everything will be red for a good to go shorting opportunity, stress-free trade setup. And while we're here, we can have a look at the dollar. So the dollar, as you can see here, it's a mixed scenario, so very unclear. So let's have a look at the chart. So we want at least the daily and the weekly bias to be aligned, either bearish or bullish. At the moment, it's bullish and bearish. Bullish on the daily, bearish on the weekly. So we want it to be aligned. At what point will this be aligned? Well, If we get back below the low of yesterday, then we'll have a fake out high on the weekly, because we broke the high yesterday and we came back inside of last week's high, Friday's high. That's bearish. But because we took out the low of yesterday and pumped up, that's bullish on the daily chart. So at the moment, it's conflicting and there's nothing to be done on the dollar. Not that I trade the dollar, but I use it as an indication as a gauge, because the majority of the assets I trade are in divergence of the dollar. Now, you'd expect if gold is going to sell off, then the dollar needs to rise. So in that case, what we have here is the price back above the previous week's highs over here, which is bullish. So we do have a little bit of confluence here, but we've got this peak formation, the highs of this week, as a potential resistance. If we break last week's highs, then that would be very bullish for the dollar and very bearish for gold. Okay, so if you've got any questions, let me know. Like I said, you can have a free trial of this indicator. You can reach out to me on DM, or you can post your... if you go to the education channel, you can sign up to the link, and then you'll need to send me your email address. You can post it in whatever channel and just tag me so that I'm aware that you've signed up, and I will then process the application for the free trial, but I will need your email address. Okay, so 55 minutes until the PPI data, and then things will start to clear up towards Wall Street open, and see how the dust settles around that as to what trading setups might appear. I mean, we've got a trading setup in oil already showing. Let's just have a quick look at that. So oil, as you can see, the majority of that table is bullish. So we've broken out of the monthly highs, the weekly highs. We're still inside of yesterday, still inside of yesterday's range. But what we've done is we've broken back up inside of Asia's low, so that's bullish. We've got the closing price as potential resistance, but there are prospects of a continuation to the upside in line with the breakout of last week's highs and yesterday breaking out of Friday's highs, staying outside of Friday's highs. So we're in breakout on the daily, on the weekly chart, and on the monthly chart. We broke through the highs of December last week, or even the week before, and everything is looking rather bullish. So the indicator is giving us a bias to be looking for a long. I don't trade at this time of the day, but this could well take off and rally. Again, we've got data coming up, so it's not. I would not advocate trading ahead of the data, but the indicator is giving us a trend trade to go long.